Yes, what's up, guys? Today I'm going over this ENA long I took yesterday, and I'm gonna explain everything in depth, and I'm gonna explain the pre-planning first because um, I'm going to explain this first. You have ENA on the low time frame. I was saying you have this beautiful range with your first deviation. Now you have to wait for your step 3 to form itself and to break structure and go higher. Then Wozo was updating this in the circle. This was in the gulag. Wozo was saying in the circle, an update, you distribute it here. You need to grab extreme liquidity and break structure to go higher. Okay, let's explain it because I actually took it. So let's delete everything and let's go over it in depth. What is the context saying? Where are we? And yeah. So in ENA we had sort of had a distribution right here at the top. It was not the best. It was like a 2-tap with a pretty good return zone right there, and you grab this liquidity point. Okay, so you grab high time frame liquidity. What do I always say? The first move down before you go up very aggressively is your liquidity point. So what I'm gonna draw this as my liquidity point, which you took at your tap 2. This means the liquidity is already grabbed, and there's a chance for it to make a model 2. A model 1 would make less sense because liquidity is already grabbed. Okay, what is this gray area right there? Let's see what it is, because that is this is gonna be demand on a lower time frame, but the gray area is always an inefficiency in the chart. And what do we have here? We have an inefficiency, and I don't have this a lot in my YouTube videos, but what you can see, you got this fair value gap right there. You got this area. Look, you got this area, which is not filled. This is an inefficiency, and boom, it creates another inefficiency. So you have a double inefficiency here, which is of course a very likely point for price to bounce from. And you got some demand below that. Why do I care less about the demand? Because it is all about filling inefficiencies. All right, so that's the context. We could definitely expect a relief bounce right here. And let's draw the range, because what are we doing here? We are forming a range right here. So price action, horizontal price action, which goes from low to high. Why? Because price is going like this, price going like this, lower lows, lower highs, and lower lows. So what happens here when you're in a downtrend? You want to draw your range from low to high and wait for your Wyckoff to form. Okay, so when I go on the lower time frame, you can see we were ranging. And what do I like about this range? You can see it immediately. Like, if you don't see it immediately, watch every video of mine, because you'll have to see this immediately. You see those highs, boom, 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 boom. What is this gonna be? Your liquidity trail. Here are stop losses, here are stop losses, here are stop losses, which market makers want to grab. Okay, so this is your liquidity trail in the upper section of the range. And now you have price fucking around in the lower section of the range. There's more price right here in the higher section of the range, which probably means right now the volume profile is a bit more up. And that's what you can see, right? This is here is not much volume in the range, and here is a lot of volume in the range. You want your volume profile to be right here. That's always better, because then price spends time in the lower section of the range, forms the third tap, and goes higher. So then this is gonna be your not your premium of the range, but your discount section of the range. Okay, so when I pre-price, you can see we're forming a pretty good low here, and we deviated your tap 1. This is your tap 1, the starting point of the range, and you deviated it. So this is your tap 2, coming in where? Coming in the inefficiency. Guys, study those inefficiencies, it's important. Yes. Okay, is this already a good tap? I went over, if probably a lot of you guys watched my previous videos explaining Bitcoin confluence, USDT confluence, and me trading like a 2-tap model, like a model that's already here, you can long. but that I only do that when the confluence of BTC is there and of USDT is there, and that was not the case right here, because you did came into some demand, but there wasn't a confluence for USDT and Bitcoin to trade it already. Okay, so this was no trade. I was waiting for better time displacement, for a potential long right here. And what do we see? Because this is very important. You see this all the time. You saw the post of Wozo that here was a distribution. And why is this distribution being made? Okay, this was your range from high to low because you're in an uptrend. And you see your deviation 1, your deviation 2, and this is going to be your distribution, okay, which broke structure right here. Why is price distributing right here? And don't panic when price does that. Oh, my plan is now worth nothing anymore. No, because price very often, and I'm gonna show it right here, when you're forming an accumulation, very often distributes after making a tap 2. Like this is your tap 2, okay? It very often makes a distribution which ends up going to the tap 3 POI and then goes higher, okay? And finishes the accumulation. So this is your range from low to high. And what can you see is that you indeed formed a distribution right here. You had your 1, you had your 2, you had your 3, okay? Which sends price into this tap 3 POI and then goes higher, okay? So you very often have a distribution or an accumulation when it is a distribution, a high time frame distribution. But you very often have price sending, market makers sending price lower into that third tap POI so they can fill more positions, break structure, and send price higher to the technical target, okay? So having that in mind, we can trade this. So this is going to be our distribution, and we can watch for, hey, market makers want to send price into the third tap POI. What's your third tap POI? You first move down before you go up. So this point, you already know it by now. This is going to be your extreme liquidity POI, and now we're gonna look for literally our trade, and hopefully the volume profile is going down as well. But what do we have here? We have a perfect liquidity grab, and let's see on the lower time frame I can show it. Liquidity was grabbed and price went higher, and that's what you want to see. You preferably don't want to see price fucking around right here, grabbing extreme liquidity, fucking around, like going lower. Like this is perfect. You have that extreme liquidity grab, boom, price goes higher aggressively and breaks structure. Let's see what the volume profile was saying while we were breaking structure. And the volume profile was right there. Let's see where the break of structure was, because the break of structure on the lower time frame you could have entered here already. That was not my entry. I faded this entry, but this was a completely valid entry. My entry was right here on the higher time frame break, and that break was also, as you can see in the volume profile, when I go on a higher time frame, you can see this break was inside of the volume profile. And I saw this entry a bit later, so price broke structure. I didn't enter. I waited for the pullback. My entry was literally right there on 54 was my entry. Yeah, 54 right there. Stop goes below the low, and you target higher prices, and you target the range high as your final target. Let's delete the volume profile, and then you can see you have some supply right there. Price can go to, leaving the inefficiency. So that can be your final target, and you have those highs above, of course. Now we're gonna watch what can our partial TPs be, and on the 45 we have this less bullish candle going down, leaving the inefficiency, which can be a possible first take profit. And on the lower time frame we have some supply as well. We have some supply right here, right there, which can possibly be a small TP as well. And then you just de-risk your position on the way higher, and just slowly scale out of your position, because you don't want to lose money on a trade. And yeah, Your final largest take profit is obviously going to be the range high, because that's a technical target of the Wyckoff model. You can see price rejecting from here. You're already up 1.3, so you can sell a small bit, you know, to be a bit de-risked. You, even if you like it, can throw your stop loss to this low. I like to keep my stop loss below market maker points. But I have to decide if I'm gonna trail it or not. Right now, I took some small profits right here, so I don't really have to trail it right now to this low. But let's see when I play it. Price was going higher, and yeah, this is the trade. It's already pretty much de-risked, and price was in the volume profile. You have this amazing return to zone in the upper section of the range. Yeah, it's just a textbook Wyckoff model. So I hope a lot of you guys learned something. Let's join the fucking gulag to get those calls, okay? Let's get in a circle to get those calls from Rozo, and see you in the next video, guys. Ciao, ciao.